Good morning, everyone. Sorry for the delay there. I had to step away from the computer there just for a moment. Little 911. Oh, dear. Okay, I know. A little inside baseball. Not fair. Okay, so here we are just a few minutes after the morning open, and let's review here where we've been. I always like to have a bit of an overview of what the market has been doing. And for that, the daily chart actually tends to give you a pretty good perspective. And what we got here, last week we saw a couple big rally days, these looking more impressive than they were. I think the first day here was actually a pretty good rally. If I remember right, that was Tuesday or Wednesday. The next big bar, most of this came in the overnight, and then we kind of stalled. So we got our little breakout scenario going on. We got our breakout. Could even bring it down here to the close because you can see the open and closing prices. Pretty significant, somewhere around the 77.50 zone. So we now have our breakout and our retest. And I think that's what we're going to be looking at here. Once we see the retest and a possible reaction, then we're going to have the market in a bit of a bind. So at this point, you could place a just in case order to buy above this swing high. And once we see where the bottom end is, where the buyers start to show up, then we'll really have the market pinched. Volume is tapering, but I think that's more to do with the expiration, which is it this week or next week? Might be this week. No, next week, sorry. If you haven't already noticed, I'm bad with dates. All right, let's take a look at the Eagle here, and looks like it was fairly range bound overall for the European session, tapering off a little bit here, getting back toward, it looks like, the overnight lows. Those of you who like your first in sync Eagle signal, well, this one a definite winner. Right there, printed just a few seconds or minute or so after the open, and boom, down she goes. Your trading day could be done. We're not even 5 minutes into the day. You Raptor traders need not left out. You can do the same thing. What you would be looking for is your first in sync signal of the day. And what that means is it has to be in sync with your trading bands, with your clouds. So here we have clouds stacked in a bearish fashion. We come out with a number 3 signal. That's your first signal. And that too, a very quick decline to our secondary support zone. I see there's a couple new names in the room here, so bear with me just a moment as I go over what you're looking at. This is the full DTS system along with the Raptor. So here on the top left, we have the Hawk micro scalper. Top right is the Falcon swing trader. Bottom left is the Eagle trend trader, and then the bottom right, of course, is the Raptor. You may notice that at the bottom here, I've also added on the Bollinger Band suite. I featured the Bollinger Band suite in one of our Rabbit Hole Friday sessions, and I liked it so much I decided to keep it on. The market that I tend to focus on is the NASDAQ. That's my personal favorite, but you know, feel free to ask for another market. Hey, way to go, Ray. Ray in and out already. He says, I jumped on that Raptor number 3 sell signal right away and scalped for $110. Could have got more, but I just took my target for the day. Nicely done. That deserves a golf clap. The market definitely with a bearish flavor right now. Like I said, I think we're going to see a retest of support, maybe getting as low as 77.50. That's what markets do. They test and retest support and resistance areas. Looking for more buying or selling support. Had a couple late filter entry signals here in the Falcon. Late filter entry occurs when your filter goes out of sync, comes back into sync. The trend line, however, never changing color. That's very important. Yeah, Keith says, yay, Ray. I was daydreaming of the open for the first in-sync signal. You know, an easy way to convince yourself of the validity of the signal is just go back through your charts. You'll see that most days it works. And most days you don't even need to leave that much of an exit order either. Because it's the open, there's going to tend to be some early momentum, usually. It doesn't usually look back too far those first few minutes. But that is one of the advantages of trading is we have all this information, all this history. It doesn't cost anything except a few minutes of your day to go back and examine it all. Oh, we're getting all these discretionary signals. I'm so tempted to hop on board one of those, and it looks like the one that just printed here also making decent gains. Certainly getting low enough to find our profit objective. Oh well, I guess I just gotta hang on here for a little while. Now that it seems clear that we have a trend, waiting for a pullback is going to be the easiest way to get back into the market. Oh wow, they just fallen out of bed here. My problem now is it's not the direction, it's stop placement. Right, so I happen to get a signal here. Where are we getting signal? Here we go. So I happen to get a discretionary sell signal on the Raptor. Where do I place my stops? That's the problem. So I may choose to enter down here on a break, but ideally we want our stops 2 swings back. Well, there's swing 1. There's swing 2 above the high of the morning. Yes, I know, that's crazy, but that is the proper swing, at least to start this trade. But I can't afford that, so I have to wait. No point in, jamming your stops in ultra tight or just picking an arbitrary number and hoping the market doesn't tag it, because you know it will. All right, we got a bit of a number 3 signal forming here. That is a hard edge bounce. It is a trend continuation signal. Given the same problem, the problem of stop placement, I would wait for a strong second push entry. So I've got at least 2 bars counter. This doesn't give me a warm fuzzy feeling, I have to admit. But the trend is the trend. Oh, I don't know if I want to go counter trend just yet. Oh, look at that. Okay, we do have a bit of a counter trend push going on. Ooh, all right. I was going to say we can wait for a little bit of a second push opportunity on that number 2 signal. Oh no, something's going on here. Well, that number 2 signal, we had a nice little 232 setup here. I mentioned this one the other day. If you're looking at counter trend signals, the 232 is actually a stronger setup in that we see the failure of the with trend signal. So we get the counter trend signal, and that's what kind of leads to a little bit suspicion with the with trend signal. So the number 2 signal is the counter trend signal. Then we come back with the hard edge bounce, the number 3 signal, followed by a number 2 signal. That 232 setup very often will see a move back to the hard edge. I was prepared to take the second number 2 signal, but I would have preferred to see a little bit of a hesitation, a second push opportunity. It did come, I guess, off of this bar here, but it never really formed a full bar against the signal. Ray's watching the VWAP. He says the 5-minute VWAP, the third deviation, is at 77.44. So that would certainly encourage some buying, I would think. All right, so we're back now, made it all the way back to the second hard edge. This is the tricky part. Are the sellers going to step up here? We've got a trend line down there, which will cause some buying. The Bollinger Suite's already bearish. I don't know if we're going to get a, I guess we got a short signal right there. This is, again, just one of your discretionary signals. I don't know if I want to hop on board just yet, but there's a good chance it's going to go down here to test the trend line. I guess I've waited this long. I have to wait for it now to test the trend line, look for the reaction, and then look for the next signal. All right, there we go. There's the trend line test. This will encourage some buyers. And it should also confirm our next signal to short. Oh, darn it. Come on. Really good test of the extreme. Okay, let's see if we get another buy signal. Okay, we have the market in a bit of a bind. I'm going to throw a just in case order to short down here. And I will entertain the next buy signal. All right, here now the number one signal forming. That's the cloud crossover. So the cloud's out of sync, back into sync. There's a little pullback. I guess I better get my exit order ready. All right, there we are. And my profit target, 49, down here to 44. Oh, Ray called it. Come on, give me another bar, you stinkers. I'm going to be a little bit more aggressive with my stops on this trade. I'm not really comfortable with how far we've come. I know the trend is down. Don't tell me I'm going to, I tell you guys not to strangle your trade. Don't tell me I'm going to strangle my trade. Hey, way to go, Ron. Ron says 3 good trades. I'm up 200 and change, going to sim. Well done. Yeah, I'm going to get tagged here in a second. Kind of, the sellers have taken their foot off the gas pedal, it seems. I'm looking for a break-even opportunity at this point. Come on, give me one more bar. There we go. Okay, trades at break-even. Oh, really? Really? You're going to kiss my profit target? Of course you are. Of course you are. We were lacking a little follow through on that. And here now with the buy signal. All right. So we've got the number 2 signal. The band's not especially broad, but the hesitation of the market heading lower is making me a little bit more bullish, at least very short term. Get the trade to break even. Okay. Well, that one worked out a little better. This is very often the case. If the market, even if you incur a loss, that's information that you've paid for. When you incur a loss or you see the market reverse or not follow through, it's usually telling you, nope, I'm not happy about going lower. I'm going to try going higher. So that's always a viable trade. All right. That's one for the good guys. Yeah, Ray makes a good comment here. The target by 2 ticks less would have hit your target. That's what Mark did, right? Yes. Typically with our Raptor, we have a 20 tick target. And because the same thing for the Falcon, and because the market occasionally comes up a tick or two short, Mark actually started going for a 17 tick target, especially if he was trading considerable size. If he was trading 5 or 6 contracts, he would be happy with the 17 ticks rather than try to hold out for another 2 or 3 ticks only to watch the market reverse and take you out of break even. Well, a profit is a profit, and you know, I've mentioned it many times before, and for the benefit of the new people, some of you might be wondering, well, why isn't Eric taking this signal and 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 so on, right? Because you don't make more money in trading by trading more often. That may work well on the production line. That may work well in your store. But in trading, you do not earn more by doing more. In fact, it usually has the exact opposite effect. While you can see that some of these signals worked out just fine, you can also see that some did not. Right? There's one that would have cost you a few dollars. Here's one that would cost you a couple of bucks. You make more money in trading by actually limiting the number of times you trade. Your goal should be to make $100 per day, per contract. And that is the secret. The per contract bit. Because if you can make $100 a day per contract, and whether that be 2 $50 trades or one $100 trade, after that it becomes a numbers game. So if you can do that with a single contract, $100 a day, well then obviously 2 contracts would be $200 a day. 3 contracts would be $300 a day. 5 contracts, $500 a day. And then if you combine that with limiting how many times you actually dip your toe back into the market by establishing a trade quota of 2 or 3 trades, that takes a whole lot of stress off your trading. I think it takes a whole lot of stress out of your trading, because now you're only looking for 2 or maybe 3 really good opportunities in the day. That means you don't have to chase the market around when it's kind of stuck in sideways mode, unless a very appealing opportunity comes to you. So if you say are trading 5 contracts and you trade 3 times a day, that's $1,500, all from a tiny little $100 trade. And it is much easier to find 2 or 3 winning trades than it is to try to find 10. Good luck with that. Try to find 10 trades without sucking up a loser in the meantime. It's difficult. If you haven't figured it out, it is tough. Okay, looks like we're going to get a trend change signal. Looks like the buyers are going to give it a poke here. So let's see about that next buy signal. And for those of you just starting out, you know, you understand the importance of a trade quota, you understand the importance of your $100 target. Don't try to trade 2 or 3 times to begin with. Try to find that one trade that you can make money day in and day out. Because if you can't do it trading once a day, you're not going to do it trading 3 times a day or trying to trade 3 times a day. Okay, this signal that printed here is, it didn't come across as a number 1 signal because it's an early number 1 signal. The clouds are almost fully crossed, as you can see, but they're not entirely crossed over. The trend is still down. You could have a just in case order to short below the lows, but this is a pretty big pushback. Here it'll be probably look a little bit cleaner on the eagle. So we have a little bit of a sideways trading range developing, but you can see this was the last leg lower, and this is the pushback. What I'm looking for is a break of that swing high, because then the market, that will be the second leg up. Okay, this signal also an early number 1 signal. Again, not printing as a number 1 because the cloud's not fully crossed yet. Ooh, they're thinking about it. Ray's got the VWAP numbers. So the second deviation, he says, is 77.61.5. Well, that's kind of where we're at right now. And fair price target is 77.85, which I think puts us somewhere close to the open. Well, all right, I'm going to cancel that. My order not going according to plan. So we'll put that away for now. Actually, you could bracket this. This is viable. You can throw a short order down there. You can throw a buy order above here and just let the market sort itself out. Set our profit targets. So 67, we're going to go 77. And 48, we're going to go 38. There. These are our eagle targets. 10 ticks. Probably getting a number 1 signal here on the Raptor. Oh, we should. We've got a trend change signal here already on the Falcon. Oops, Paul having a bit of rough luck. He says, I've been on a losing streak lately, so I stepped down to the micro. Do you find the volume okay on the micro, Paul? Slippage isn't an issue? I can't overemphasize how important it is to be able to find that one winning trade a day. And then once you can do that, say for about a month, then you can graduate to try to find 2 trades in a month. Oh, good to know. Paul says volume's very good on the micro. For those of you trading smaller accounts, the micro is a good place to trade as well, because you can trade, you don't have to trade the full contract. The ETFs are good for that as well, because you can, instead of trying to buy a full contract, you can just buy 100 shares or whatever. Although if you're going to do the ETFs, I would recommend doing the spider over the Qs, the E-mini. That's the spider, the SPY. Okay, well, they keep taking a look here at the bottom end. We've got the background highlight, so we've got a number 1 signal to short now. That's our cloud crossover to the short side. Right, they're now the number 2 signal. Let's see if they come back with trend. If we get a signal to short and then another buy signal, then that could be an interesting opportunity. I've got the top end covered as per the Eagle. number 2 signal, actually, it did get high enough to find my profit target. Note how the trading band is starting to twist up like a rope. So we've got a lot of hesitation, a lot of sideways trading going on here. They're fairly content around this 77.50, 77.60 price zone. All right, well, you could have interpreted this as your early number 1 signal. I'm still a little leery here what they're gonna do. Okay, we got the breakout. Where's my pushback? Give me one more bar and I can get this trade to break even. Actually, what I'll do is I'll roll my stop here in the interim. I would dearly like to see this bar finish bullish because it would have a nice long tail to it. Come on, buyers, where'd you go? See, they broke this swing high back here, so the sellers are beating up on them. Because everybody knows the trend is down. Well, they're thinking about it. Get above that high. Come on, get above that swing high, and I can get my stops up. Yeah, I'm not real happy about them hesitating here. So the next push up is really going to be the last chance for the buyers. There we go. Time to get my stops up. If they fail at this point, well, then I may as well get tagged out. They're now the official #1 signal, and I'll sneak my trade to break even. I got my fingers crossed. I got the big target going here too, so I'm going to roll my stops more aggressively. I got the big eagle target. We'll give it, I'm going to cover my swing trade, my swing target. So I got my $100 locked in. See if I can get that. Nope, they're not going to give it to me. All right. I was trying to go for that bigger eagle target as per the eagle setup, but that's okay. Oh, there they go. I got tagged just a little bit too quick. That's all right. I'll take it. Thank you very much. Well, thanks, Ray. Ray says, now that was perfect, Eric. Every once in a while, hey? Every once in a while, things work just the way they're supposed to. And actually having really good follow through on that number 1 signal. So if I were, looking for my trade quota, I have certainly made it. I have made my trade quota. I am done. I have made my 3 trades. I am profitable on all 3 trades. And like I said, after this, it becomes a numbers game. Just trading more contracts, not trading more often. That is the fact of trading that eludes most traders. And then they wonder why it's so difficult to make money trading. If you want to get paid for your time, get a job. That way you're guaranteed to get paid. In trading, you can put in the time, and not only can you not get paid, but you can actually end up losing money. How's that for a deal? All right, we're going to be closing up shop here shortly at the bottom of the hour. But you know what? That's the benefit of trading too. Do we really want to sit in front of a computer for 6 hours a day? I think not. That's why you tend to see volume or market activity die off toward the end of the morning session. It will tend to pick up again around the close, but typically you get your early move and then you get your late move. I think yesterday was a bit of an exception, where the market was actually a little bit more active early afternoon, but that tends to be the exception, not the norm. You should also come to trading with the kind of mindset where you're just here to pick their pockets. You're not really here to hit the home runs. You're here to hit singles. If you allow me to mix my metaphors. All right, no questions? Okay. Well, gang, we're going to button up shop here, and we'll do it all again tomorrow. I'll talk to you then. Bye for now.